What is going on? How's it going? How are y'all doing tonight? Welcome to Trading Night School. How's everyone? I got a brownie. We're just hot off the oven. Tonight, man, we're going to be looking into one of the most important lessons you'll have in trading, and that is the importance of strategy. There we go. Before you even trade, you need to have a strategy. You need to have a rule set that you've created for that strategy. And you need to have discipline to stick to those rules. If you can't do that, you should not be trading unless you would like to lose your money. Trust me. It will happen. So that's what we're doing tonight. I'm going to talk about the importance of it. I'm going to preach it, and then I'm going to teach it. I'm going to give you some ideas for strategy and some help you get started in creating your own rule set. But you need to create the rules. They're your rules, not my rules. So how's everybody feeling tonight? How y'all doing? Chime in. Let me hear you. I got 9 of you here so far. We're going to kind of stall and watch the Bitcoin chart and see what's going on. Nice, Seth. What's up, Cy Hall? How's it going? Real life. How are you? This is a good brownie, y'all. Really good. Good video and audio. Somebody just check that for me before I... I'll tell you what, ETH is moving without BTC right now. Ethereum, oh man, it's on a tear. Hey, what's up, Tom? How's it going, buddy? Hoping I'd see you here tonight. Crypto Taco! Glad you're here. Good deal. Well, 14 of you. Hey, Jonathan. What's up? What's up, Merle? How's it going, buddy? How's your Tesla short going? Jesse Brown, do me a favor. Rewrite your question. I'd like to answer it, but I'm not sure I understand it. We're just stalling. We're just waiting for the room to populate, the class to start. So I'm enjoying the brownie. Did you already take profit, Merle? All right. Hey, Ron, how's it going, buddy? You're talking about Elliott Wave theory? That's what my channel's all about there, Jesse. Nibbler, hey, all right, we got about 22 people here. We're gonna get going tonight. Just to clarify, this is a trading night school, so we're not doing Bitcoin TA. What I'll do though for you is just kind of take a peek at this wave and tell you where I think it's headed. But we're not doing Bitcoin TA right now. We are. Rob. That's right. Thank you. Sorry about that, Rob. I got a lot of names to remember associated with your screen names, and they're all different from the trading group to. Yeah, Jesse, no, I can't explain that tonight. If you'll go back to that's what this whole Trading Night School is about. If you go back to the beginning of the Trading Night School, that's what this Trading Night School is about. So yeah, my whole channel is about Elliott Wave theory. So if you've just found me recently, that's what we're doing. Thursday nights this is a class. This is a trading class, and so tonight you don't have to know Elliott Wave theory necessarily to understand tonight. It's a good lesson. It's an important lesson. It's very, very important. But I can't answer that now, Jesse. But my entire channel is devoted to that. So click subscribe, join the trading group, and we'll help you understand it. You'll pick up a little bit of it tonight. Definitely go back to my older trading night schools. All you got to do here is go to on YouTube, find my channel, which basically you just go to the Jim of All Trades channel. Right here, go to my videos right there, and then just scroll down. You see, they all look like this right here, Trading Night School. So just scroll down when you see one, but just you can see them right here, right there, and right there. You'll notice them. They're yellow. They stand out, so you'll understand. Now when you get down here, when I used to actually do thumbnails for my videos, so I kind of stopped doing thumbnails, guys. I'm just I got lazy, so now we just have screenshots of all my videos. But anyway, so just go back and look at these, and I talk about Elliott Wave theory in detail as in a class. So definitely check those out. They're all free of charge, and they're there for you. They are what they are. All right. Cool. Yeah, Elliott. Basically, the premise of Elliott Wave theory, just to help you, is that the market moves in 5s and 3s, moves impulses and corrections. An impulse is a 5-wave move, whereas a correction is basically a 3-wave move, and we're trying to interpret the market with 5s and 3s. Basically, that's the very fast of it. There's a lot of rules. There's a lot of assumptions. There's characteristics of these waves that we can begin to identify as they're being created, and so there's lots more to that. But that's the basic Elliott Wave sequence right there. Boom, and it can go down and then up as well. So it can be in a downtrend or an uptrend. It doesn't matter. So that's as fast as I can give it to you. All right, we got 28 of you. Let's rock it out tonight. Okay, tonight, what are we talking about? We are talking about before you trade. Okay, before you start putting your money in. I'm preaching now. Okay, so I'm getting in preaching mode. If I put my mic here, is this okay? Is this all right? I don't want it right in front of my face. So let me know if this is fine. I think it's picking me up just fine. So basically, before you trade, before you put your money down on the market, you need to have 3 things in place. Okay, you need to have a strategy. Okay, that strategy must include a rule set for. Let's subdivide that now with a rule set for entry, for maintaining the trade, and for exiting the trade. Okay, if I added a 4th one there, it would be stopping it out as well. So, in other words, when you are trading, you've got to have a strategy. I mean, you cannot come to the market and just say, oh, I think it's going up. I'm going to enter right now. Okay? I'm going to enter the market now. Because, I mean, how many times have you entered the market, it goes up a little bit, and then it comes back, and takes all your profit away and then goes down. Okay, the market goes up and it goes down. And if you try to come to a market and you say, I'm just going to go willy-nilly at it because I think price is going up and I'm just going to buy, you might get lucky on occasion. But guys, listen, this market is going to eat you up, and you might win a couple of trades, and then you might get cocky at the beginning, and then all of a sudden you're going to start losing because you're going to get more confident in your silliness, really. So when you come to the market, you need a strategy. You must have a strategy for trading the market. A strategy that is proven to be repetitiously profitable. In other words, that the strategy, when applied properly, when applied with the rule sets that you take, and the discipline that you have to have. That's the third thing. Strategy, a rule set for that strategy, and discipline to follow that rule set. If you don't do that, guys, you're going to lose your money. And too many people will get all focused in on indicators and focused in on moving averages and Elliott Wave theory and learning all that stuff, but nobody ever really takes time to talk about discipline and having rules, and having rules for your entry that you actually check off, a list that you check off. And if they're all in place, then you're okay, I'm going to put my money down. You don't want to come to the market as like it's a roulette wheel. Like you say, okay, it looks like it's going up, so I'm going to go in. I got a 50-50 shot. And, let me just tell you something. If it looks like it goes up, you probably got better chance of actually shorting the market than because a lot of times the market will go the opposite way that you think it's going. It's the way it does. But anyway, so tonight we're going to be talking about, before you even start trading, the need for a strategy, for rules for that strategy, and discipline to implement those rules. Okay, that's a big deal. And what I'm going to do is I'm going to talk to you about the importance of it, which I've just started doing. But then also, then what I'm actually going to do is I'm going to give you a couple of strategies based on Elliott Wave theory. Okay, we've been studying Elliott Wave theory, so we're gonna come up with I'm going to show you a couple of strategies with the Elliott Wave theory that you can use. I'm going to show you two non-Elliott Wave strategies that you can use as well. And I'm going to get you started on the rule set. But listen, you really need to create your own rules, okay? You need to study the market and do what we call backtesting. In other words, when you come up with a strategy, you say, okay, I'm going to do this because it seems like the price goes down whenever I see this. And so when I see this and when I see these criteria that the price is going down, I'm going to take that short. And then you need to go back through the market, see how many times it actually repeats itself over and over. Does this happen over and over and over? Okay, so if it's a repetitious movement of the market, if it's repetitious happening, then as long as it's repeatable and the steps are repeatable and the criteria are repeatable, then you have a decent strategy. You can make up your own strategy by studying a chart. Okay, you can study the chart. I've studied these charts long enough I've created a couple of my own strategies that I'm still working out rules for. So anyway. So what we're going to do tonight is just stress the importance of strategy. I'm going to give you a couple of different strategies to go back and mess with and play with and try out, back test and try on the market, maybe with paper trading, or trade very small amounts of money if you're going to trade it with real money. And then we're going to give you some Elliott Wave. We're going to talk about Elliott Wave strategies, and we're going to talk about non-Elliott Wave strategies. And then we're going to talk about the rules of those strategies. We may not get through all that tonight, okay? So, so there we go. All right, you guys ready to rock? I hope so. Let me remind you of the 3 emotions that you need to learn to control when you are trading, okay? 3 emotions that will kill your trading: fear, hope, and greed. Fear, hope, and greed. Now, how does fear, hope, and greed kill your trading? How does fear kill your trading? Well, most of you guys are watching. Glad you made it, Dinosaur Muscle Cars. Most of you guys are watching Bitcoin go up and up and up and up and up. And right now, fear. Maybe you're not in a trade right now. Maybe you're not making any money on this latest push because you thought it was done. Maybe you took profit already, and it's going up. And you've got fear right now that you're going to miss out on some profit. You've got fear of missing out. And so your fear of missing out is going to cause you to want to get back in that trade. It's going to create an urge within you that says, well, I don't want to miss out. I don't want to miss out. So I'm going to get back into this market. And that fear of missing out is going to get you in a bad trade because when you operate on fear, guys, you're going to get burned every time, I guarantee you. So you jump in a trade in a bad position because you got fear of missing out, and then all of a sudden the market tanks on you. You're like, oh crap. And now you've missed out twice. You've got the pain of missing out. Number one, you missed the move already, and then now you got the pain of dealing with your emotions, or the aftermath of the money that you're now spending, because you had fear. Okay, so just keep that in mind. So fear will kill you. Now, also fear. Sometimes you'll lose a bunch of trades over and over and over, and you'll start to lose confidence, and you'll be scared because you don't want to lose money, and so you'll set bad stops. Too tight. Your stops will be too tight, or you won't enter into a trade though you got a good setup. You got a good. Your strategy is showing you got a buy signal, but you can't pull the trigger because you're afraid because you've lost too many trades, and all of a sudden you don't want to lose any more money, so you really get tight. And actually, what happens is if you get into the trade, you'll lose more money because fear will cause you to lose. To get into bad trades and to keep you out of bad trades. Ryan, thank you so much. Wow, what's up, man? How are you doing, buddy? I appreciate you stopping by, and thank you for that gift. That's so kind. I really appreciate that, man. Thank you very much. Thank you very much. Let's see. Yeah, I feel this all too well. You've been sitting on the sidelines after you sold at 9,200. Yeah. So I actually gave a signal to buy at 9,200. So in the trading group, man, you should join the trading group, man. That'll you'll not be alone, and you get some help through your trade in a group. So consider that, Mr. Muscle Cars. But that being said. So fear. Okay. Then hope. What happens is you'll get in a trade. You're not exactly sure. You're hoping. You're like, well, I'll get in the trade and hope it goes up. That is so bad. I mean, I don't know how many of you have done that. You're like, okay, I don't know where it's going. I think it's going to go up. I hope it goes up. Okay, I'm going to go long right now. And then what do? So you're getting in the trade because you hope. You hope. You don't know. You don't have a strategy. You're not sure. You have a gut feeling. You want it to. You have a volition and a will, and so you want the market to go up. You hear people talking about the market going up, so you just get in and you hope it goes up. How many of you have entered a trade because of hope like that? That is so bad. So bad. I just want to remind everybody that this is a trading night school, and I know it's going to send a lot of you away, but basically this is I'm teaching trading in this. So this is actually a class. This is not a TA night. And so basically I've got the Bitcoin on the chart on the screen right now so we can watch price and whatnot, but I'm talking to you right now, just kind of lecturing and just reminding you of things that you need to know as a trader. What I'm teaching you is more important than knowing where price is going. Okay, so just want to remind anybody that just popped in, this is a trading night school. So this is actually class, okay? And we're in the lecture mode right now. But that being said, how many of you, I want to hear some answers. How many of you have entered a trade thinking, I don't know where it's going, but I hope it goes up. And you basically entered on the basis, the reason you entered is because you had hope that the price was going to go your direction. You didn't have any indication, you didn't have any strategy, you didn't have any signals that were telling you necessarily to get in, but you just had a gut feeling, maybe price was starting to move up, and maybe you got in from hope. That is not good. Not good at all. Anybody relate to that? Anybody at all? Do I have anybody listening? Okay. Now, the other way hope kills your trading, I'll let you guys answer that question while I'm talking about the next thing. The other way hope kills your trading is, yeah, there you go. Hope will keep you, so you get in a trade and then the trade goes against you, and you'll stay in that trade. You'll stay in that trade because your hope is that that the trade will eventually turn around and come back to you. And so you'll stay in the trade, keep losing, and you'll lose more and more and more, hoping that the price will turn around and come back. And so hope will kill your trading as well. Okay? So fear and hope. Now greed. How does greed kill you? Well, right now, yeah, right. There you go. Yeah, you just got a comment here. I keep hoping for a dip. Right? Yeah, absolutely. You're hoping. You don't know that there's a dip coming. You're hoping for one. You're looking for one. You really want one to come. And so while you're waiting for it to dip, price is moving on you. And so instead of having hope, drive your trading, you need to say, okay, well, is there any indication? Is there a strategy that would tell me whether I should buy or sell right now? Do I have a strategy for that? Okay. I hear you, Vaughn. Do not listen to Vaughn. He's joking. That is sarcasm at its best. Now, what greed will do is that you'll be in a trade and you'll be in profit, and you got profit, and it's going up, and that profit's going up, and you're like, oh, I want more profit, and the market just doesn't go up forever. Eventually, it's going to correct, and so what happens is you'll stay in the trade too long, and then there'll be a correction, and then all of a sudden, before you know it, you've just lost $100, $200, $300 of the profit that you had. You're like, oh man, and you lose the profit that you had. And so, fear, hope, and then greed. Also, greed will get you into trades as well. You'll win a trade. You'll take your profit. You're like, I want to do that again. And that greediness and that adrenaline and all that, you're looking at immediately like, oh, I should get right back in the market. I should get right back in. And so, fear, hope, and greed, guys, that's what's going to kill you. That is what's going to kill you. Okay. Bob Becker, you're so funny, man. So funny. So gifted in humor. All right. So, how do we keep ourselves... everybody knows there's fear, hope, and greed that you're dealing with in this trading game. So, how do we keep ourselves from, letting fear, hope, and greed control us? And the answer is you need to have a strategy. Okay? You need to have a strategy that is repetitious in the market, okay, that it happens all the time, repetitiously, okay. It needs to be consistent enough for you to trade by it, okay. So you need to have a strategy that works, okay. Now that strategy needs to include criteria or rules that you check off. Things have to be in place. If A, B, and C are in place, then we're gonna, then we'll buy or sell, But they need to have rules for the entry into the trade. Okay. Then you need to have rules that guide you in your maintaining of the trade while the trade is going on. Okay. So you don't exit too soon or exit too late. Okay. And then finally, you need to have an exiting rule set. Okay. Rules by which you can exit the trade, where you can now these are objective. In other words, they're outside of you. They don't depend upon emotions. They don't depend upon your insight. In other words, if this happens, then I do this. It's like you're a robot. You become a robot in your trading. You become so disciplined. You've got a strategy. You've got a set of rules for that strategy, and now you discipline yourself to do it. Okay, because you can have a strategy all day long, and that strategy can have rules. But if fear, hope, and greed, and your discipline doesn't overtake the fear, hope, and greed during that process, then you're gonna die. You're gonna end up. So you've got to have a strategy. Okay, that's gonna protect you. Okay, so what we want to do tonight is now that I've basically just told you the importance of having a strategy, the importance of having a rule set, and then being disciplined in order to being disciplined to keep that rules. Let me show you my trade that I took today, and ultimately I didn't have a strategy for exit like I wanted to, and so. But I'm going to show you the trade that I took today. I'm already out. I made profit. It was very good profit. This is a Forex trade. Okay. My entry. Okay. My entry point was right where the arrow is. Right here. And I went short right there at the market. Right there I went short. Okay. Now, why did I take this trade and why did I go short right there? Okay. First off, I'm an Elliott Wave trader. So this was an Elliott Wave trade. Okay. What does an Elliott Wave trade look like? Well, I see 5 completed. I see an impulse wave right here. Okay. This was an impulse wave, and I count 1, 2, 3, 4, 5. Okay. I've got a 5-wave impulse, and it's finished. And I know it was finished because I had a reversal off the top. Okay, so because we had a reversal off the top, I was expecting that when you get an impulse wave, you expect a three-wave correction. You expect a 3-wave correction. This is my Elliott Wave knowledge. Okay, and so because we got this first leg, and it was impulsive, and it was definitely a direction changer. Okay. The second thing that happened, I'm going to go to the 10-minute time frame here and show you something else. Another reason I was interested in this trade is because right around news, we were sitting right here, and we got this was a 3-wave. This was a 3-wave move right here. Okay, that came to this level right there. Okay, which is about 50% of that wave. If I actually showed you the retrace, it would be about 50 to 60%. And so I took this trade because I saw this as an impulse down, a 3-wave. Then I saw this 3-wave. And now I'm expecting another leg of this correction. That's what I'm expecting. So I'm not going to give you all the rules right now. Okay, but I entered the trade right there on the news event. Okay, so I went short. Well, price kept going up. Price kept going up, and I was okay. I let it go into a loss. It went into a loss, and then price actually went my direction. I was like, okay, good. This is great. And then I woke up. I went to bed, and I woke up the next morning, and price was doing this. I'm like, oh man. So now I got fear. I got like, oh no, all my profit. I had like $70 or $80 or $90 profit in there, after a little move like that. And then price went against me, and now I'm like, $50, $60, $70 in the hole, and I'm like, okay, what do I do? Well, I didn't go crazy. I just calmly waited because my rule set didn't tell me to get out of the trade yet. My rule said wait the trade out. And so basically, price during the day started doing this. I'm like, very good. And so price finally started going my way. Okay? And then what happened? It did that again. I was in the money here. I was in pretty good money right there. And then it did this. And I'm like, oh man. But I had a trend line right here. And we didn't break out of the trend line. And we were right around my entry. So I just waited it out again. And it finally paid out. And the trade finally paid out, and I took profit down here. Okay, I took profit on this when this candle when it started going back up. I took profit right there. So there's my trade today. Okay, now why did I take that trade? I had a strategy. Okay, I had a rule set that allowed me to enter this trade. Okay, it gave me the direction, and so I had a basis for the trade. I took it short. It was scary for a time there. It was scary there, but then it finally paid me out. Okay? But I didn't get out of the trade, even though it went against me a little bit. I didn't get out of the trade. Didn't get shaken out. because I had a rule set for my entry and nothing had been broken yet. My rules, my criteria for the trade had not been invalidated. And because of that, I stayed in the trade and I waited patiently and I let the trade play out. I don't know if I waited completely patiently. I mean, there are hairy times. You get anxious a little bit and whatever, but the point is, this trade finally paid out. A friend of mine, I was trying to figure out where a good target for exit would be, and a friend of mine said, "Well, I just did the obvious, just throw the retrace on it." So we threw the retrace on it, and the 50% mark is about where we got out. Now it could go on down to the 618, but I decided that I'm going to take profit here, because if it comes up here, I don't want to lose all the profit that I had. So I'd rather have bird in hand. I took my profit and was satisfied with it, even if it comes down to that level. I'm okay with it. And that was my trade today. And turned out to be over $300 for me. And it wasn't a giant trade, but it was a good trade for me, and I was happy with it on the foreign exchange. So that was my trade today. And I did it because it's an Elliott Wave setup. Okay, so let's talk about this strategy today, and I'm going to tell you the rules that I use to trade that particular trade today. Now, so in other words, when I tell you you need a strategy, now I'm going to give you, based upon all of you that have been studying Elliott Wave with me, okay. We're now going to begin applying Elliott Wave principles to trade setups and how to enter into trades, high probability trades. Okay? All right. So we want a strategy that is repetitious. Well, Elliott Wave is all over the market, so the entire market can be interpreted through Elliott Wave. And there's all kinds of different Elliott Wave principles, but I'm going to show you how to trade a correction. Okay? How to trade a correction. So this is a strategy for trading a correction. Are you guys, are y'all with me? Let me know if you're with me. I want to know how many of you are actively listening and you're at a place where you can actually respond. And let me know if you're ready for this strategy that I'm about to give you. Type in yes, ready, or something like that if you are ready. Awesome. I'm just curious to see how many of you guys are actually with me, because I know y'all are listening, and I'm glad the chat isn't running wild for sure, because I can't teach you and then focus on the chat at the same time. It's too hard. Okay, so I'm going to take the moving averages off the screen to clear it up. This is an Elliott Wave strategy. Okay. All right. So here's what we want to see. I'm going to go to the 1 hour chart. What you're looking for, I'm going to remove the drawings tools. There we go. What you're looking for in the chart is for Elliott Wave. Remember, an impulse wave or an Elliott Wave sequence is 1, 2, 3, 4, 5. 5 waves, okay? Now, you have to know what an Elliott Wave sequence looks like, how it measures. Okay, you've got to know how it measures. You've got to know how to properly identify an impulse wave. You've got to know that. That means you've got to go back and go through the classes that I taught you. You're going to have to learn how to measure the waves. You're going to have to learn how to count the subwaves and things of that nature. So there's more to than just counting individual little waves. You've got to know how to count a proper Elliott Wave. Now, this strategy is for those of you who have gone through the class and understand what an impulse wave looks like. You're looking for a finished impulse wave, okay? Once the 5th wave is complete, all right? Usually you know that, well, before I go there. So we're looking for the 5th wave to be complete. Once the 5th wave is complete, we're looking for a 3-wave pullback, okay? We're looking for an ABC correction that has some characteristics to it, okay? So what are the characteristics of the ABC correction? We're looking for 3 waves, We're looking for those waves to be in the opposite direction as the 5-wave impulse. We're looking for those 3 waves to be in the same proportion, the size of the impulse. In other words, it should be sized appropriately. Now, it's not going to be the same size as the impulse. It's going to be about half the size, okay? But it should be about half the size, 50%. It should be retracing about 50% to 61%, okay? At least about in that ballpark, okay? Like that. Those are some basic things. Now, so we're looking for proportionality in size and in time. And you can see how this wave is actually played out. We had a 5-wave move, and now we have a 3-wave pullback. And it's proportional to the size of this. Now, if any of you know Elliott Wave, what are we expecting next after this 3-wave pullback? What are we expecting? We're expecting a continuation. So I'm actually looking in this particular scenario to go long soon. Okay, I want to go long. I want to trade to the upside. But right now, I want to teach you guys how to trade this correction. Okay, so what's the best way to do it? Well, number one, most of you are trying to time the top of the wave. Okay, most of you are usually trying to time the top of the wave. So you get the very top, and then you enter into the trade. If you knew that this was the very top, you go short, and man, you got a beautiful trade, right? Well, what's the problem with that strategy? Let me show you what the problem with that strategy is. Okay? One, two, 3, 4, 5. Guys, look at that. We got a finished 5 waves, guys. Is this the top right here? Okay, let's go. This is the top. Let's go short right here. Now what happens? Oh, yeah, good. Oh, we're doing, oh, no. Oh, we lost that trade. Why? Why did we lose that trade? Because that wasn't the top. And so you went short and you missed the top. Okay. We stopped that one out. We lost some money. But here's the top. That's got to be the top. I mean, it's straight up. It's got to be the top. Okay, let's see. Okay, good. Oh, no. All right. We almost got the top. Not quite, though. So what would have happened in real time, because these are hour candles, if this started going up again, you're thinking, oh, no, I missed it again, and you might stop your trade out, and then all of a sudden it goes down on you, okay? So finding the top of a trade is very, very hard, okay? Does anybody know if Bitcoin's finished? Is this the top? Is that the top right here? Is that the top? All right, if it's the top, let's everybody go short right now. Right now, let's go short. We don't know if it's the top. You don't know if tonight price is going to pump on you. It's threatening right now to go down. I mean, it's gone down like $100 in the last hour or two. It's threatening to go down. But how many times has Bitcoin kind of gone down a little bit and then it pumps again on you? Pumping. I hear you, Seth. How do you find the top? So back to the other chart. It's not good to try to find the top of a wave and short it, because you're gonna end. I mean, you might catch it every now and then, but you're gonna lose money that way. Okay, so in this strategy to trade a correction, here's what we do. We know that a correction is 3 waves, right? So what we're going to do is trade the C wave. That's what we want to trade, the C wave. Now, here's often what happens in a correction. Price comes down, and then it comes back up in 3 waves. So this B wave is 3 waves as well, okay? So once we see price come down and then reverse in 3 waves, and once it's finished, then we take it short. And then we're gonna, or long, depending on which direction we're trading, and then we trade the C leg. Okay, so what for this strategy we're trying to trade leg C of an ABC correction. So that's what we want to do. Don't worry about A, okay, because you're going to get a B, okay? Now why don't we trade B? Well, we don't know when A is going to end and B is going to start, okay? It's very hard to know that, okay? So you can guess, and there's some other strategies we can use, but I'm just saying this is a simple way to trade a correction, that you don't try to get the entire thing, we just go for C, okay? Now, let's talk about the characteristics of the waves, and then I'm going to give you a rule set here that you need to tick off on a checklist here, okay? So let's just talk about an ABC correction and the general pattern of an ABC. Okay? Now, the rules of an ABC are that the A wave is 5 waves, okay? It's 5 waves, or it can be 3 waves, okay? Okay, Bob's asking a good question. Okay, how do you know when the 5th leg is complete? Well, when you see, so right here, I've got a 5-wave structure right here, but I don't know exactly the top of the 5th wave, okay? And so when you start to see a sharp rejection, a sharp rejection of price, that's deep, okay? That goes beyond, just a small correction. Actually, and if you draw a trend line of the wave, you'll often see it break out of that trend line. Okay, so that's something we can talk about. Okay, but anyway, yeah, once you see the end of that wave, okay, and then you see a nice sharp rejection, that's how you kind of know. But you need to have a good 5-wave count that measures properly, and we're going to talk about that in just a minute. Okay, all right. So good question, Bob. All right, so your A wave needs to be 5 waves. It can also be 3 waves, okay? And then B is always 3. B is always 3, guys. The B wave is always 3 waves. Now, also the B can be a triangle or a a triangle. Yeah, it could be a triangle as well. But generally B is 3 waves, and then C is always 5. Okay, always 5. What's up, Max? How's it going, buddy? So, what we're looking for is a move down goes in 5 waves, followed by a 3-wave correction. That's what we're looking for. That's the setup. That's the setup for that's this trade setup for trading a correction. We're looking for a 3-wave move back. Okay, so we're looking for a down move and then a 3-wave move back. Okay, now here's some of the criteria that we're looking for. Okay, first off. Okay, let's just talk about the rules for this trade, okay? Let's just talk about the rules. I'm gonna start giving them to you here. Here we go. Okay, number 1 rule, we need 5 completed waves, followed by a clear reversal wave. Okay? Okay, so we need 5 clear waves that's followed by a reversal wave. Okay? Number 2. After the reversal wave, there should be a B wave that is 3 waves. So we're going to call the reversal wave A, and then the B wave is 3 waves. Now, another rule. The B wave for this strategy needs to retrace at least, for my setup, for my rule set, this is my rules. You can make up your own rules, but this is for me. I want to see at least 50%. Okay? At least 50% of wave A. And all 3 waves need to be complete. Okay? All right, so there are this is my entry criteria. Okay? So what am I looking for? My entry criteria is this. I'm looking for 5 completed waves. Secondly, I want to see that followed by a clear reversal wave right here. Okay? Clear reversal wave. I want then, so why, let's look at this right here. You see this one right here? You say, why isn't that a reversal wave? Because 5 waves wasn't complete. We didn't have 5 completed waves. We had 1, 2, and then we had 1, 2, 3, 4, 5. This is the 3rd wave, okay? That's not 5 complete waves. That's just 1, 2, 3. That's 4. We don't have 5 waves yet. So that's why this wave wasn't our reversal wave, okay? But once we got this going, now we've got 5 waves, okay? Now we're looking for the end of this wave. So once this thing finishes, you're going to see a clear reversal, okay? On the larger time frame, it's going to be a big engulfing candle. Let's look on the 4-hour time frame, and let's just see what it looks like. See how this has a huge wick on it? It's a reversal wick, okay? This is wick, and it's a reversal candle. So right there, you've got indication that there's a reversal going on here. Hamed, certainly, if you get basically all corrections are 3 waves in some level, right? And this is a basic Elliott Wave zigzag correction. There's no doubt about it. But here's the thing. Here's the point of this. If the wave that you're looking at doesn't fit this criteria, you don't trade it. Okay? In other words, you guys have to get out of your mind that you have to catch every wave, that you got to catch every move of the market. If that's where your mindset is, you need to buy and then hodl, okay? Because then you'll catch every wave. You'll get down and up, okay? You'll make money and lose money, make money and lose money, make money and lose money. You just buy and hodl. If you think you want to catch every wave, what we're doing is we're coming up with a strategy that says, okay, when I see this pattern, when I see this reproducible pattern, following this criteria with this rule set, I have a trade on my hands. Okay, so that's that's the key here, guys. You got to stop thinking like, oh, I got to get every wave. You're not gonna get every wave. You're just not gonna do it. The best traders in the world don't get every wave. They just don't do it. Okay, so let's go back to the rule set. I want 5 completed waves. Okay. I want a clear, followed by a clear reversal wave. We got it. Check mark number 1. Done. Now I want to see, after that reversal wave, I want to see a 3-wave pullback. So I want to see it come back in price 3 waves, okay? 3 waves. That's proportional to that. And I want to see it come back at least 50%. So here's what I'm going to do as a trader while I'm waiting for this thing to happen. Okay, I got this wave here. It looks like it's finished. I'm going to put the retrace on it. Boom. All right, now we're just waiting in time. Waiting in time, waiting. Yeah, trading is about waiting. You say, no, I want to get in the trade right now. I got to get in the trade. No, Guys, listen. Got to be patient. Wait for the setup to happen. All right, so here we go. Okay, I got 1, 2. Okay, hey, look. We got 3 waves, okay? Is that 3 waves complete? Well, look, here's my 50% line right here. There's 50%. So I got 3 waves. We're not quite to 50%. Now, I want to see it at least 50%. And that was, by the way, that big candle right there was a news event that I was aware of. So on the Forex, I take news into account, and I was actually trading this around the news. And so for me, what I was waiting for is that news. I wanted this thing to finish. And so once we got up here, I took the trade at the 61%. So I don't always take it at the 50%. I just want it at least to the 50% retrace. But it can be to the 60% or 61%. Let's say 50 to 61% of A. Okay? And so right here, on this candle, today, or actually it was last night, I took the trade. Why? I got 5 completed waves, number 1. I got a clear reversal wave, number 2, after those 5 waves. I got a 3-wave pullback to 50 to 61%. That's my setup, okay? I enter the trade short. So I'm going to the down direction. Down is where I want to see price. I'm short now, and now we watch what price does. Price is looking good. This is a good trade. Looking great. Look at this. Feeling good. Okay, price is great. It's going my direction. It's going down. Oh no. Oh no. Now, right here, we have to have other rules, right? Because now these are just the rules to enter the trade. But now what are my rules now for maintaining the trade? How do I know when to get out? When am I going to stop the trade? What is my rule set? What's going to tell me? Am I just going to go on my emotions? Oh no, I'm scared. It came back again. I'm out of the trade. Well, had I done that today, I wouldn't have made the money that I made. But I waited this out. I waited for it patiently. Okay? So you need, not only do you have to have an entry set of rules, you have to have stop rules. Where's your stop? You need to know where your stop is going to be. You have to know what you're risking and how much you're willing to risk. So your emotions can be proper in the middle of the trade. Okay. All right. Let me just pause here for a minute and. Hamed, C is never 3. Never in the world is C3 ever. C wave is always 5 waves. Always, always, always. Okay? So if you see a C leg that looks like 3 waves, it's not a C. It's a Y wave. WXY is 333. Okay? So never, never, never is a C wave 3 waves. Never. C is always 5. Okay. How y'all doing so far? We understanding? So this setup is basically after you see 5 completed waves, you're going to wait for this, and then you're going to wait for a pullback. 50% of the to 61%. And then you're going to trade the C leg. Oh, good night, Bob. We'll see you, man. Guys, I can tell we're going to have to carry this one over to next week. I mean, we've already been almost an hour, and I'm just in the beginning of this one strategy. And so what I'm going to do is I'm going to carry this strategy through, and we're going to finish this one. It's only going to be one Elliott Wave strategy. I'm going to give you another Elliott Wave strategy next week maybe, and then I'm going to start giving you non-Elliott Wave strategies as well. But I just, I wanted to apply the Elliott Wave principles for you just so that you can, begin to, look at this. Okay. For those of you just joining, this is a night school. This isn't TA night. So I'm watching price. I see price sitting there. I'm pretty sure we're going up. I'm not super worried. I think we got one more hit. We got to stop hunt to the high before we go down. Yeah, but the C cannot be 3. You said C can be 3. It can't be. Never. C is never 3. C is always 5, okay? Okay, awesome. All right, so there's the entry criteria, okay? Now we can have some more criteria to add. Let's add some other rules to make this a little bit better. Between the 4th and the 5th wave of a wave, generally you're going to have divergence, okay? And so let's go on the 15-minute time frame, okay? And let's see if we see some divergence here between the 4th and the 5th wave. So right here, There's the 4th and the 5th right there. And then right here, we've got divergence. Okay? So what makes this trade better, so if we add a 4th wave, trade is better, more confident if divergence is present. Right. The point is, Hamed, if it turns into a WXY, that's not this trade. Okay. In other words, this trade, I mean, you know, we got to be nimble. Okay. This is just a base. I don't have time to give you every scenario for every Elliott Wave trade. This is just a simple way to think about trading right now from an Elliott Wave perspective. So you're going to have to keep your brain in one thing for now. We understand that there are other wave shapes and other things, but I'm trying to, we're teaching very slowly and carefully that if this setup isn't, if this doesn't happen, okay, if this doesn't take place, then it's not our trade. So this is an ABC zigzag correction, a simple correction, and if these criteria, and often WXYs will do the same thing, okay? So we're looking for a clear, reversal wave followed by a corrective wave about halfway, and then we're going to trade the other leg down. Okay, I haven't talked about the exit yet, so anyway, I hope that helps you understand what I'm trying to do here. You've got to understand that this strategy and this setup is going to be invalidated, but this is the rule set for this strategy. In other words, this is a strategy to trade an ABC correction if you get one, and if you don't get it, you don't get the setup and you don't get the trade, and that's okay. You got to be okay in your mindset to miss a trade, to miss a move in the market. You're going to have to be all right with that. You're going to have to say, "Oh, I missed that one. I'll get the next one," and so you wait. You wait for the setup to come, and you don't FOMO in, and you don't chase the market, because you're gonna lose your money, guys, if you chase the market. Okay. All right. So that's the entry criteria, and that's the rules. Okay. And so the trade is better though if divergence is there. So you want to have your RSI open and find the divergence. No, you're fine, Hamed. I'm just trying to help you understand what I'm doing here. Just so I'm trying to teach everybody on a very, very basic level right now. Okay, you've got an understanding of Elliott Wave that's more complex than a lot of people here. So you're fine, brother. I'm trying to teach everybody, and it's really challenging for hard. Okay, so there are the rules. That's a strategy right there. So what you do, I mean, what we could do is let's go back and back test the market. Okay, let's go back. For instance, let's go back to Litecoin for a minute, and let's just back test this market. Okay, I'm going to go to the 4-hour chart. And I'll just show you how we trade it wave to wave. And this is what I'm doing on a daily basis with you guys as I am interpreting the market as well. I'm just looking for 5 waves, okay? Now, this first one is hard, and I don't. It's actually complex. I don't want to talk about it. So I'm going to exclude this one right here for now. Though it's just too complex for now. All right, but here's the deal. Once we had there's your first wave. This is actually your second wave right here, and that's a complex wave. That's actually an expanded flat, and that's a challenging wave. And you got to know about expanded flats. Okay, that's another night. We'll learn how to trade expanded flats. Okay, I mean, and that's the thing. So let's just start right here. This wave right here, and let's just zoom into that. And let's go to the 1-hour chart. There's my yellow mark. Now, this is quite challenging. This wave is quite a challenging one to count. But if I were to count it, here's the way I would count it. 1, 2, there's 3. See how this wave is kind of a different wave? 4, and then there's 5. So there's 5 complete waves. Okay? Now, in order to know that, you'll have to apply the principle of Fibonacci as well. Okay? Let's see. That's not the greatest. Yeah, I mean, it comes past the 1618. I don't like it so much, but it's pretty good. The 1-2 is hard to see in here. I'm not sure if 1-2 is down here. 1-2 could be right down here, right down there. Hard to see, but anyway, we've got 5 completed waves. You've got a clear reversal wave, okay? But here's the problem with this one. Clear reversal wave, and so what we're expecting, what you would want to see, after this reversal wave is a 3-way pullback to 50%. We didn't get it, okay? We didn't get it, and so this trade wouldn't have happened. This trade wouldn't have been good for us, okay? For our to trade that correction. In fact, trading corrections is hard. I probably shouldn't have started here, but I did, so it is what it is. Okay, let's look at the next wave. So we got a pullback, and now we got the next wave. Okay, 1-2. That's not even 1-2 because that's lower. There's the 1-2 is in here. It's like 1, 2, 3, 4, 5. Boom, finished. Okay, and then look what we got. We got a. So we got 1, 2, 3, 4, 5. 4 was sideways. It's finished, done, complete. There's 5 complete waves, and then we got a reversal wave. Okay, now let's go to the 15-minute time frame. Right there, I marked the reversal wave. Now, what are we looking for? Well, let's put the retrace on it. What's our rule set? Okay, we got a reversal wave. We're looking for 3 waves to the upside. Okay, 3 waves. At least 50%. Well, this went past 61 to 68. It went all the way back up here, and then it gave us a reversal candle. Okay, this might have been. It's really, really hard to see 3 waves in here as well, but they're there. Maybe on a smaller time frame, they're there. So we've got a reversal wave. We've got a retrace that doesn't break the plane up here. It's at least 50 to 60%. That fits the criteria. Let's see if we have any divergence on the chart. Okay. Divergence makes the trade better. Trying to get it in here. There is no divergence that I can see up here at this wave. However, we do have divergence here. There it is, between the 4th and the 5th. There it is. See here? Boom. So we've got divergence. That makes the trade better. We got a pullback. We got a retrace. Okay, so now what we're doing is we're going to trade the C leg. We're just trading the C leg to the downside. Okay, that's all this trade is. It's trading a correction. Okay, so we're going to go short in this region. Okay, and then and price gave us a lot of chop here, but it ended up coming down, and it gave us a from like $51 to $49. It's a scalp trade, but that's the idea. We're going to trade that to the downside. Now, we haven't talked about exits. We haven't talked about stops or anything like that. We're just simply looking for entries. Okay. Now, let's talk about the large time frame, because the larger the time frame, the more probable the trade is. Let's talk about the large time frame. All right. I'm looking for 5 completed waves, because once 5 completed waves, I'm looking for, after that 5 complete waves, come on, I'm looking for a 3-wave pullback, guys. Okay? Now, so look what we've got here so far. This is the way I'm counting it. 1, 2, that's 3, that's 4, this is 5. Is 5 done? Are we finished? Or we got more upside? Don't know. Okay? Well, let's look on the chart. Do we have divergence? Yeah, guys, look at this. We've got divergence. Boom. Boom. Okay? We've got divergence. We even have divergence between the top of the third, and the fourth and the fifth. So we've got divergence. So we're really, really close to this finished wave, but we don't know it's finished. So you could try to nail the top and keep missing it. Or, what are we looking for, guys? What are we looking for? In this particular trade setup, 5 finished waves, followed by, what's our rule set? What's our criteria? Followed by a clear reversal wave A. So guys, what we're going to do is we're going to let the market reverse. We're going to let the market come up, and we're not going to worry about where the top is. We know it's coming very soon. We're not going to worry about it. We're going to let it reverse, and we're going to let it give us that wave. Okay? Once that wave is finished, we're going to be looking for a 3-wave pullback that's at least 50 to 60%. And then this is where we're going to enter the trade short, and we're going to trade the C leg. That is going to be the trade. That's the trade we're going to take. Okay? That is this particular strategy. It's just trading a correction. Trading an ABC 3-wave correction. The larger the time frame, the better. The more money you're going to end up making. So you're going to short Litecoin from 75 down to 50. Maybe. Okay? So, what's up, Gerard? How's it going, buddy? All right. So that's just the entry criteria, guys. That's just the entry criteria. And so you can go through and you can try to find those trades. They'll come up, but you're gonna have to wait for them. Okay. Right here, you'll notice that if you just traded this entire move right here, you got a 3-wave pullback. You see it? See this? You got a 3-wave pullback. Now, another thing you could do is in an uptrend, instead of playing the C wave, another strategy you could employ is, instead of what you do is, once you get a completed wave and then clear 3 waves back, okay, you go long again and you wait for 5 clear waves to finish. You wait for those 5 waves to finish. And once they're finished and you have divergence, you exit the trade, you wait for the 3-wave to finish pulling back, and then you go long again, and you let the 5 waves, that's the way you trade in a trend. Okay? So once you get a 3-wave pullback, there are rules, and we're going to talk about these next week, okay, for trading in a trend. But just the idea here is that we're taking Elliott Wave, what we know of Elliott Wave principles and Elliott Wave rules and Elliott Wave patterns, and we're developing a strategy that we can now trade the market with. We can actually trade it looking for these big things. So really, if you want to trade the correction, I would suggest that you only trade the C wave. Okay? Now you can try to trade the A wave. Okay? You can try to trade it. Okay? But it's hard. Okay, I would suggest you let A and B take place, and then you trade C. That's what I would suggest. Or W, X, and then trade the Y. All right? Now, that's in a correction. Now, after the correction is over, once the 3 waves is over, there's a whole criteria to enter into this trade to go long. Okay? And then we need to talk about that another night. Yep, I'm still live, for sure. Okay, guys. All right, so let's recap, and let's just talk about let's go back, and all I gave you right here were the entry criteria. So I don't care what strategy you come up with. I don't care what strategy you have and you use. Is it repeatable? And do you have a clear set of rules? That those rules can be objective, and that if those rules, you can't check that box, you don't enter the trade. Okay, so you need a clear set of rules. Okay, there are more than one. There's other things other than Elliott Wave to trade. You can trade using different strategies. You don't have to trade, using Elliott Wave. Okay, but I like Elliott Wave a lot. It really helps me in my trades. It helps me in my maintaining of my trades and staying in a trade long enough, guys. I'm still long right now. I've walked through all this sideways chop today. A lot of people got shaken out of their trades here. Okay, they got shaken out there, and now people starting to go back down again. Okay, listen, this is just a great shakeout, but I haven't exited my trade yet. Okay. And for reasons, right? So my strategy is telling me to stay in. Okay, I was very close to getting out on that candle. Okay, but my strategy said wait one more candle. Okay, I waited one more candle and we got the reversal. Okay, which I was expecting. So anyway, I guess the point I wasn't hoping for, but I was saying it's a high probability of getting a reversal candle there. And so when I got the reversal candle in, I got the confirmation to stay in the trade. Okay. So I'll just tell you right here. You'll see this. You see my line across here that I've got the 20 moving average here, and I also have this line right here. Once we crossed that line, that was like, oh no, this might be going down. Okay, but I saw that this candle was about to close in the 1 hour. Okay, it was like 5 minutes to close, so I waited for that thing to close, and then I watched price, and it started down, and then it reversed, and just a little bit, and it stalled. There was no continuation evidence, okay, and it continued to the upside. Once it broke back inside, I stayed in the trade. Okay, that was what happened today, and that's why I stayed in that trade. But my exit criteria was a crossover, a break out of this channel. But this was a false break; it didn't break. And also a close of the 1 hour candle beyond the 20 moving average. That was my rule set for this particular trade. Anyway, we'll talk more about that down the road. But I didn't get out because I had rules. Okay, I had a mindset that says I'm not going to be scared out of a trade. I'm not going to be shaken out of a trade willy-nilly. I'm going to have criteria that's going to help me maintain this trade so that as long as these criteria are in place, I'm going to stay in the trade. Now, I've gone an hour and 15 minutes, and we really need to stop now. And all I've given you is the entry criteria for trading a correction, but that's okay. What I'm trying to do is teach you the principle right now that you have to have a strategy with a set of rules. And so if you cannot write your rules down, rule number 1, rule number 2, rule number 3, if you can't write them down and you don't know those rules and you can't put little check marks next to those rules, then you're not ready to trade because you're just trading the market willy-nilly, and you might win some trades, but you're going to end up long-term losing a lot of money that way. But if you have a strategy that works, that is reproducible and findable, you're going to end up making money as long as you're disciplined to stick to your rule set. Okay, so let me. So again, the last thing I'm going to say, just to emphasize this, you must have a strategy that is reproducible in the market. That strategy needs to have a rule set for entry, for maintaining the trade, for exiting, for stopping the trade. You need a rule set that is objective and outside of you. It's outside of your emotions. If this, then this. Okay? And then finally, you have to exercise discipline in following those rules. If you can do that, guys, you're going to become good traders, okay? There's a lot more to say along these lines, so we're going to spend the next 3 or 4 trading night schools. I'm going to start giving you strategies, okay? I'm going to give them to you. I've developed these. Other people have developed these. You can find strategies all over the internet, all over YouTube. Find some strategies. Find the rule set. See if they work. See if you like them. Just look up strategies for trading strategies. RSI strategies, whatever. Start looking and seeing and then back test that strategy and see if it was going to work for you, okay? All right, I'm going to teach you the ones that work for me, and yeah, and we'll go from there. There's so much more to say, guys. I just don't have time to do it tonight. Any questions about what we've covered tonight? And how many of you are starting to see the importance of a strategy? I hope that came through tonight. The importance of having a strategy and a rule set. I hope you guys are seeing that. Any questions or thoughts or anything I can handle before we get out of here? For those of you that made it this far, I'm going to give you a present. I'm going to do some TA on Bitcoin right now, but I want to make sure that you guys have all your questions answered before I start. So I'm going to do TA on Bitcoin right now. So hang around, and I'll do some TA on Bitcoin, Litecoin, and Ethereum. I'm not going to take chart requests, but I will do some quick wave analysis for you. Okay. Hope that was helpful for you tonight. I really do. I can't stress how important it is, because if you're just jumping in and out of the market willy-nilly, you're gonna lose your money. You are. So decide, hey, listen, the market's not going anywhere. Bitcoin's not going to run off on you. You're not going to miss out, because the market always comes back. Yeah, there are different ways to draw that trend line for sure. So there it is. Off the wicks. All right, let's do some analysis for Bitcoin here. I'm on the 1 hour chart. One of my strategies is the 20 MA crossover. Okay, I entered this trade right here at $9,200. Boom, right there on that candle. Yeah, I entered at 92. The candle had been, it was solidly going up, making a higher high, from this candle. So my rule set was, here's the 20 period moving average on the 1 hour chart. Price closed beyond it. It didn't close beyond it. It came back and closed again beyond it. And then this next candle stayed on this side of that and continued to the upside. And so I entered in this on this candle or this candle around $9,200. And then, so that was my entry. It stays above. Everything's been staying above the 20 period moving average. We've wicked it a little bit, but my criteria is it didn't break it. So we're bouncing off of it right now. And so right now I don't have any reason to cut it. In fact, I have an Elliott Wave reason not to cut it. I'm waiting for one more hit to the high. So that at least I believe. My understanding of this wave right here is 1, 2, 3, 4 does not violate the 1, guys. And now I'm waiting for the 5th wave to finish. Okay? And that's going to be the 5th wave of the 5th wave. So that's why I'm still holding this trade. I'm waiting for, so I have an Elliott Wave reason to hold it. 1, 2, 3, 4, and I'm waiting for this 5th wave to finish. So 1, 2, 3, 4, and then 5. That's what I think. That's what I believe right now, at least. And I haven't. Again, we didn't cross below and stay below the 20 period moving average. So that's one of my exit criteria for now. And I want to see a finished 5 waves, and right now I don't see a finished 5 waves. Okay, so that's why I am holding this guy. I am holding it. So, yeah. Let's see. Let's look at this wave right now and see what's going on. Best I can tell, we have a B, or WXY, something like that. WXY is a 3-wave move. And now that looks like a 5-wave move and a 3-wave pullback So now it looks like we're going to continue on. That's the way I'm thinking for now. So yeah, it's looking like it's going to continue on. Let's see where, if that's correct, if it's correct, where's it going to go? Generally, it's going to go to the guys. This might hit above 10,000, guys, maybe. If that's 1-2, if that's a 1-2 of the fifth wave. If that's right, this needs to be 1, 2, 3 is way up here, 4, 5, 10,100 maybe. Let me pull it a different way. Pull the fib projections a different way here. The 618 is my first target. But because of the nature of this wave, it looks like it needs to go higher than that. So 9960 is my first target. But because of the nature of that wave, maybe it might be going up to the 1-to-1 extension, which would be 10,235. That's a possibility. That's very bullish. Notice the channel that I have drawn here. We've stayed pretty much in that channel. There's a good chance we break out of it, or we come up and test it. 10-1 to 10-2 maybe. Looks like we're going to get a pump that high. Can't guarantee it, but it certainly looks like it. Yeah, but for me, guys, I'm waiting for this thing to pull back. I'm waiting for a major pullback. My count of this wave right now: 1, 2, 3, 4. Waiting for 5 to finish, and so this fifth wave. 1, 2, 3, 4, 5. So I'm waiting for this fifth wave to finish. It's just all but finished, guys. I mean, it's close. It's really close. Probably tonight. Probably this in the morning. Might pump tomorrow, you know. But probably going to be a reversal. Probably going to get a reversal. Again, remember, we have divergence on 1, 2, and 4 hours. We've got divergence. Let me show you. I don't agree with the wedge, Max. I think Hippo's got the count a bit, really bull count with the wedge. I'm not an agreeer of that. So on the 1 hour, we've got divergence here. We've got it on the 2 hour. We've got it on the 4 hour. So there's divergence everywhere, guys. There's also hidden divergence as well. All right, for you though, Max, I'm going to draw the wedge. Are you thinking the whole thing's a wedge, Max? Or just this right here? Max, are you saying the whole thing's a wedge? Like that? See, to me, it's just not a wedge. It doesn't wedge unless you include that, I suppose. Yeah, I have a hard time. I have a hard time seeing it. Sorry, bro. Send me a chart, man. Make me a chart and send it in Telegram. 12.9, huh? All right. Okay, I had a question about... thanks, man. I appreciate it. Minus touch there. Jago, how low can this correction go? Well, generally, an ABC correction is going to come 50%. Okay, at minimum, I mean, generally a two wave. Like if this is like a big one wave and we're going to get a two wave, generally it's going to come 50%. Okay, at least. So, you know, we get up here. If we're going to come three waves to 50%, just throw the retrace on it. It's oh, sorry. Where is it? Right there. We're going to get some kind of a three-wave move at least to here, right? So, you know, 81, 37 is 50% of that move. Where are you in the world where it's 12 noon? Wow. Are you an Aussie, Tommy? I think you are. Aren't you an Aussie? Let's see. So yeah, it could, but it could also come down to the 61%. Could come down to 77, 22. But you know, I don't know what the 200 moving average is. The 200 day. You know, we've got the 100. The 100 moving average right here sitting at 81.37 right here. Looks like we're going to have the 50-day moving average going to probably meet price somewhere around 8,500. And looks like the 20 period moving average is going to meet it right around the 236. So you see how the moving averages kind of are confluent with the with the what do you call it? The fibs. So as price comes down, boom, 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 boom. You know, it's gonna go down those fibs. Yeah, I can't tell you how low. Just the first target's going to be 50%. Let's see what the wave shape looks like once it hits 50%. If we don't have a clear three waves, then chances are we're going to go lower, right? So yeah, what I do is I just kind of wait for structure. I want to see the structure of the wave come down, okay? And so once I see the structure, I can kind of start guessing what kind of wave it is and where it might be heading. So that's what I'm doing on my channel every day for you. I'm looking at the structure of the current wave and saying, okay, this is where it might be heading based on the structure that I'm seeing, based on the Fibonacci's and things like that. So anyway, Max, did you get me a chart? Okay, not yet. Okay, yeah, Ethereum, my next target for Ethereum is 224, I think. We already hit my 217 target. I called that one the other day. Anybody trade Ethereum and called the 217 region. The next fib I'm looking for is not 236. The next one I'd be looking for is 224, 225. If we're going to keep going, then my count, my Elliott count has to be wrong. Number one, just don't forget, we've got divergence all over the charts, guys. We've got bearish divergence and hidden bearish divergence all over the charts. So remember that. Just remember that. We are in a bear market still. Okay. So if we're going to keep going up, then my count is incorrect. Crypto Hippo is a fan of this count. I am not a fan, but I'll show it to you. And this is a very bullish count right here, where he's calling this a leading diagonal 1, 2, and for the longest time I was 2, until I think it got invalidated 3, 4, 5. So there's a leading diagonal, and then what he's saying, and others might be saying is a possibility here. We got a 3-wave pullback. That's wave 2, so that's 1. There's 2, and then we're off to the races, guys. This thing's going to keep on going. Okay, so you know that's a very, very bullish count. So this would be a 5-wave move. We get a 3-wave pullback, and then we'd be on our way to keep going. So. Yeah, I think either way we're looking for a pullback, even if it's a small one like this or a larger one like that. I think we're looking for a pullback, but we're gonna have to trade smart and have yourself a criteria. You know, the people in my trading group, we're using the moving averages to help us on the 1-hour chart. You might give it a go. I'll be teaching that at some point, but I gave an exclusive lesson to them on moving average crossovers and my particular strategy with my rules. It's maybe different from the ones you're used to using. I've got some rule sets that I've developed to keep me safe in the trade using moving averages. So anyway, I'm kind of using the moving average right now to help me make sure I'm in the right trade. Because I want to be on the right side of the trade. And right now, when you're at the end of a wave, it's really, really hard to nail the top, and I want to make sure I nail the top. And so, once we get a reversal off the top, it's gonna cross that moving average, and that's what's gonna be a definite signal to go short once that finishes. So yeah. All right. Well, I mean, technically, Tom, this is an impulse wave. I mean, it's impulsive. Technically, this is an impulse. You got five waves. But remember, the C wave of an ABC is an impulse. Okay, so in other words, a zigzag ABC has 2 impulse waves, guys. 1, 2, 3, 4, 5. One, 2, 3, 4, 5. The B wave is a 3-wave move. So that's an ABC correction right there, guys. But it has 2 impulse waves. So remember, I still have a count, guys, that allows for this to be an expanded flat, where this is just the C wave of the expanded flat. It's awful high, it's awful deep, but it's still within the rule set, and it could be. So I'm not short. I'm still long right now. I'm waiting for 10,000. I'm waiting for 10,000, and I'm going to short. I'm going to short the top of it. You know how I said don't wait for A and then B retrace. Well, I'm going to short A, and I'm going to let everybody know in the Telegram group when I short it, when I take that trade. So yeah, I'm waiting for that tonight. It's going to be an all-nighter for me. I'm waiting for that because I think it's going to happen tonight. I think we're going to get a pump here soon, a little pumpy pump, and it's going up tonight. That's what I believe. I could be wrong. That is my belief system, and I'm sharing my belief system with you. But remember, anybody's belief system could be incorrect, as mine is often. All right, y'all. I enjoyed the night. It has been an hour and a half, so I hope you guys enjoyed it. Thanks for stopping by. Yeah, let's do it again. And if you're not part of the Telegram group, hey, I invite you to join it. Just check the description of this video. There's a link to the Patreon page. It'll tell you how to join up, and you can come be around with us and have access to charts and extra videos and all kinds of you got me 24, well, not 24/7, but I'm there a lot for sure. I'm trying to make that a great group, so I spend a lot of time in there. What's TG, Jim? What does that mean? Oh, Telegram. Okay, yeah. Okay, here we go. Thanks. I looked earlier, man. There it is. Okay. Oh, okay. I see what you're including. It's Max. I don't like it, man. I see what you're saying. I don't like it. Don't boo me, man. Don't boo me. Yeah, a couple things I don't like. Number one, you didn't bring it off of this wave, the top of this wave. I can't count, the one doesn't hit 2, 3, 4, 5. I personally wouldn't subscribe to that as a valid ascending wedge. Personally. But I see what you're saying. But I reject. Love you, bro. Love you, man. Okay, all right. Hopefully we get a pumpy pump tonight. Y'all have a great night. Yeah, real life. Okay. Hey, Rob. I sent you an email, Rob. So make sure check your email, Rob. Real life there. I did send you an email about 30 minutes after you joined up. So there's a video you need to watch. Just send me back an email, and once I get that email, I will send you the links, and we'll get you in tonight. Okay. All right. Excellent. Hopefully you heard this, Mr. Rob Cook. Appreciate it, man. Looking forward to getting to know you. All right. We'll talk to you guys later. Have a great night. Bye-bye. Live stream ending.